Hey everyone, welcome to the live stream. It is March 14th and it is 11:30 a.m. Eastern. Stock market has gone up real high. It's good to see. We've been in a pretty good correction where we've had stocks really go down for the last month. So it's nice to see a nice green day and see stocks pretty much flush with gains. The big stocks, the little stocks. There's some stocks that are really up nicely. There's a list of stocks that I wanted to kind of showcase that are really working today. I'll show those stocks, and then I wanted to go over some stocks that you guys want to go over. How you doing, Tomas? Good to see you. So let's take a look here and see what's going on with the stock market. So the big stocks are really working today, which is good. And we've got no earnings today. I think I don't need to go there. If we look at the heat map, wow, look at the heat map. It is like an emerald green. There's only like one red spot. Abbott Labs, amazing. That is a good day. That is a good day on Wall Street for sure. And maybe if you want, if I don't know how many people are on, but maybe look at your portfolio. Let me know what stock you think or is going up the most for you. That'd be pretty interesting to see. Let me know. It'd be cool to find out which stocks are doing the best. Maybe we can look at those stocks and see see how that's going for you. And let me take a look at my portfolio, and I'm going to pick out probably the best performing ones as well. So look through your portfolios and let me know which stocks are doing the best. I think we can use a positive day of trading. It's been a brutal day. Excuse me, it's been a brutal month. So it'd be nice to have a nice positive day. So and all right, so the highlights, it looks like Nvidia is really cranking up. And Nvidia, you know, they've had a tough time. They've had really good earnings, but the market has not given them all the credit that they deserve, in my opinion. I think they really deserve a lot because they've done so well. It'd be nice to see Nvidia do better because I don't think they've gotten a fair shake. Their earnings were excellent. So it's interesting that Nvidia has underperformed. It should be doing a lot better. Looking at JP Morgan is up, Tesla's up, Meta's really up. That's great. So it's really nice and green across the board. If I look at the sectors, technology, no big surprise. Energy, financials. Wonder why energy's up. What's the story on energy? I'm gonna look at Chevron to see if I can answer that question. And let's see what's going on with energy. So energy's up, financials are up. Interesting. It looks like Tomas QFIN is one of your stocks that's doing really well. Let me note that QFIN. Carlos, good to see you. How are you? All right, so QFIN. So this is up 6.71. QIFU Technology, together with its subsidiaries, operates credit tech platform under 360. This is in China. Interesting. Okay. It's up 11% for the year. It's up real nice for the 1 year. Wow, good one. Hopefully you've had this thing for a while. Yeah, this one's doing great. So these guys are in like fintech. They operate in China. Looks cool. Market cap 6 billion. Revenue 2.45. Look at these PEs, super low. Their growth isn't all that great, but it's yeah, the growth isn't overly exciting, but the stock's been moving for a year and then 5 years. It grew really well back in 18, 19, 20. And this one here, for a Chinese stock to continue to go, actually, I guess it did have a pretty good pullback, and it started to really work beginning at the beginning of 2024. It started to really work, and it really took off in July. Interesting. Yeah, the 1 year looks great. Back in early August is when a big move from roughly $20 a share, it doubled in value very quickly. Winner, very good. Looks great. So everybody that joined, let me know which stock is really up for you today. We're having a really nice up day, as you could tell here. Just a phenomenal day. So I thought we could kind of start on positive notes, see which stocks are working for you guys. So far, that's the first one we looked at. Unier. Hi, Victor. Do you like yachts? Yachts. This one presented today. TISG. So luxury yachts. Well, this one's down 11%. I was asking, well, maybe I got the wrong. Nope. So I was asking which stock in your portfolio is doing the best today. So take a look at your portfolios and let me know in the comments which one of your stocks is doing the best. Italian Sea Group is down 11%. Did they announce today? Yeah. I guess people aren't buying yachts. Man, so these guys are in Italy, I guess. Yeah, I mean, I have no idea about yachts. This one's not doing well. Not a very good stock. PE is low. Sales are up. Interesting. And these guys do semi-annual because it's in Europe. Okay. I guess they announced some negative earnings in today's announcement. That's too bad because people got to buy more yachts. All right. So everybody look in your portfolios. Let me know what's really working for you. My top stock is DocuSign. And DocuSign's a company that I did provide a video on this company yesterday. And this is one of my holdings. It's up almost 18%. This has been a nice winner for me. It's up 48%. And I picked it up when the stock was really low. And I'm going to go on the 5-year here. So for a while, this stock was really low. And now it's doing really well compared to its low stock price. I've held this thing for like a year and a half, 2 years. So it's doing really well. I've had a really nice appreciation. And it's doing well for the 1 year, and it's having a terrific day. It's been part of that sell-off, right? It's not immune to what's been happening in the stock market, so it's not, completely avoiding the damage that the market's been imposing on tech stocks. But it's having a terrific day. Year to date, it's going to get back to even. That's pretty amazing. Starting on February 5th, they went on a slide, but they're making up ground quickly today. Good job, DocuSign. Their earnings were really good. It's just a really good growth company, super profitable, 89% gross margins. Now it's up 18%. Go DocuSign. Nicely done. Nicely done, DocuSign. So that's one of my winners. How about you guys? What's going on out there in the stock market universe? Which stocks are working for you? The other stock that really has gone up is FUTU. These guys are a brokerage in China, and they're up 8% today. Year to date, the stock is working 45% up, 106% for the year. And it's up a lot, even though it just smashed like its stock price back in the day. It's still up if you compare the stock price of 5 years ago compared to where the stock price is today. So this has just been an absolute winner. And these guys, it makes sense because in China, the number of investors is really going up. The middle class in China is really increasing in size. So these guys are just cleaning up in China. And I'm glad that I bought their stock. It's up real nicely today, up 8%. And I've provided a valuation on this company. I know I posted it on X as well as Discord. I think the stock's still discounted because they're just growing so fast. They're profitable and generate free cash. So that was a good stock for me to have. One stock that I picked up, and I decided to sell it today because it just doesn't have a big discount. I think I'm going to see this stock go down, is AppLovin. It's up 8.85, and I sold all my shares today. I picked it up on Monday, and it really dropped, right? So let's see. This is going to give me the, yeah, I think this is going to give me the, no, I don't think it is. So I picked it up on Monday. And it dropped like 12% on Monday. And now from that point, because I had a buy order, it's up 24% from just Monday. So I'm like, man, I can make a quick like 18% on a hold for 4 days, I guess. So I sold it this morning. I think this stock's gonna have trouble because it just went up too much too fast. I think this is just too much. It really dropped. I think this stock's probably gonna settle down around 250, maybe 200. I don't think we're out of this correction. I think this correction is gonna still, stick around. We're having an update. This is normal in corrections. And year to date, the NASDAQ is still having its problems, still down 11.5%, even though we're having an update. You could see that it goes up and then down, up, down, up, down. So it's going to be kind of like a real jagged staircase going down. And we can see more down days. So I just took my gains on AppLovin and moved on. So that was a nice winner. It was good to see that. Robinhood's having a fabulous day. So year to date, it's up 5%. For today, it's up 8.7%. Nicely done. For the 1 year, this stock's just been a winner for me. It's up 117% in the 1 year. So picking up Robinhood was a really good idea for me. I've owned it maybe a year and a half. So it's been a good winner. Good job, Robinhood. All right, so Junior, you got IIPR. So these guys are up 3%. Nice. Congratulations on that one. And over the year to date, this one's up 5%. The 1 year down quite a bit. These guys do. So IIPR. So Innovation Industrial Properties is a self-advised Maryland corporation focused on the acquisition, ownership, and management of specialized properties leased to experienced state-owned operators for their regulated cannabis facilities. Got it. Cannabis I remember when cannabis was going to come out. I live in California, so it just got legal a couple years ago, but cannabis kind of started to become legal, I don't know, 10 years ago. And a lot of people expected that it was going to be really profitable, but I don't think it's been as profitable as people imagined. It actually has been kind of, see here, it went up really nice and then it really just crashed. And it's never gotten anywhere near its high. These guys have a low PE, $2 billion company. They're contracting a bit in the most recent year. Really nice growth for a while. You see that growth kind of started to slow down and started to slow down in 2021. The stock sold off and it's never gotten back to its high. And this one here, so profit margins 51%. I can't see the free cash flow. Here's a margin. Interesting. Well, congratulations on that one. Hopefully it keeps going up for you. So Carlos, yeah, Chevron, I don't know that it's going to go up very much. It's an energy company. It's up nicely, 1.69, but the 1 year, 1.5% gain. You have a dividend, but that's just not getting it done. Over the 5 year, that's okay, right? That's all right, especially with the dividend. I mean, you got to add 16 to 20%, and that would get us to 100% return, which is good. But recently, I guess for the last 3 years, Chevron's done nothing. I own Chevron. I'm like, I've been lowering the share count that I have, and I might even sell some shares today to see if it's a good day to maybe thin down my my stock holding, because I don't know what story is going to help oil companies this year. It's just kind of been a space that hasn't done anything. Might have a good day here or there, but it doesn't have a nice rise. So that's been interesting about Chevron. How you doing, Mike? Did you answer the question about, is this the end of the bloodbath? No, I think the bloodbath is going to continue. I think we're having a green day, but that is kind of what we expect in these markets, right? You have these rallies kind of interjected in a bear market. It rallies for a day and then it comes back down. So what'll be important is how we start trading on Monday and Tuesday. If on Monday we have another red day, here we go again. Because the big story hasn't changed, right? It's not like, oh, there's good news, this is going on. This is really going to help the economy or help stocks. So my best guess is we're still in the hurt locker. I think we're still going to see stocks go down. It's a good day to use it to readjust, right? Like I was talking about, I sold AppLovin. I also sold out of a couple other stocks. I used the high day. I sold, and I still like the companies. I'm going to follow them. You think this is a dead cat bounce, Rotel and Cheese? Dead cat bounce. Yeah, could be it. Most definitely. We'll see on Monday. If on Monday we have a green day and we kind of keep going higher, then it could be, hey, we're gonna maybe dig out of this thing. How you doing, Shadow Guy? Wow, really? So SMH, the semiconductor space. So on the 5 year, yeah, I mean, NVIDIA is a big part of this. So it's up 3% after it was just screaming up for a while. I mean, it was up 216% over the course of about 2 years, less than 2 years. And then since then, you're actually in the red. You're in the red by 16%. So I've always said, right, I've done at least 20 videos on semiconductor. If you add up NVIDIA, Broadcom, Intel, Qualcomm, the semiconductor space, I've always said semiconductor is cyclical. It has boom periods, bust, boom, bust. So you have this boom period. Now, this boom was a massive boom. And now we're beginning to see that, hey, the data center is losing its momentum. It's losing its mojo. I don't care what fantasy the CEO of NVIDIA is going to tell us next. It's just not going to happen. It's too expensive. But these guys have boom and bust periods. Here you had the bust that, and this one, to be fair, a lot of businesses had struggled in 2022. But if you go max, you have up, down, up, down. You have these boom and then bust periods. What's this one here? This one is the one that I just noted. So that's what I've seen in semiconductor. It's interesting that it is flat. I don't know that semiconductor is attracting a whole lot of inflows. I'm not putting any money in semiconductor. I don't know what's going to happen. It could be dead money for a while, but I don't think it's going to go up. It could just be like, hey, you can get NVIDIA at a really good price. Okay. And is it going to go up? Probably not. It's just going to sit there. So that's my opinion there. Yeah, thanks for pointing that out. And Shadow Guy Mike, we were going around the horn seeing what stock is doing the best for you. So maybe you guys could put in the chat what stock's performing the best for you, since it's an up day. It's finished the week on the positive. So Mike, glad to see Abdi bounce. Can CVS not go much past 67? Let's take a look. All right. So first, Adobe. So Adobe got shellacked yesterday. Man, they took one on the teeth. Boom. Man, that is hard. Down a lot. And today it's bouncing back a little bit. That's good to see. I think Adobe's discounted. I continue to believe in the company. The market continues to believe that, hey, they don't know what quite to do with Adobe. I think it's an AI business and it's real. The market's like, it thinks AI is going to be a curse on Adobe. It's going to hurt it. The market might be right. I'm going to stick to my guns and continue to believe in Adobe and continue to buy into it. The other stock you were asking about is CVS. And CVS has been working. It's been a nice stock this year. It's up 48%. Nicely done. Up 1.4%. I think it's going to keep going up because a couple of things. Its previous highs, I mean, look at these highs. This was a $100 stock, and I think it could get back to $100. There's good growth in CVS, good profit. Some of its key competitors are pretty weak right now. Like Walgreens is not doing well, and I think that business was poorly operated, too much debt. So I think this stock's going to continue to work for 2025. Healthcare is going to continue to work. It's either number one or number two on the list of sectors. Let me take a peek. Materials and then healthcare. So it's a rough year, right? Like technology's down year to date, consumer discretionary, but healthcare is right up there, and I think it's going to keep working. So I think CVS has more upside to go. And what do analysts think about it? Analysts think it's close to fair price. I'm more optimistic about CVS, and I think it's going to continue to go higher. So let's see what happens. How you doing, Tomas? Good to see you. All right, cool. Zion Luca, where are you putting your money? Well, it's, you know, across a variety of stocks. If you watch I think you'll observe what I'm invested in if you watch live streams and in my videos. Tomas, good to see you, man. I heard that Argentina, the stock market's doing really well down there, and hopefully you're benefiting from that, Tomas. I heard that on the compound. They have this show, and I watched it. I thought it was interesting that Argentina was doing really well. New Holdings, that's the one that's making it happen for yourself. Yeah, it's up 8%. Very good. Very good, New Holdings. So these guys have not had a perfect time in 2020. They were just rocking for a while. And then we had, in February, this thing really pulled back 27%. But since then, it's up nicely, 15%. Here we go. Growth stocks. In a really volatile market, stocks will do that. I think New Holdings is a terrific business. It's really growing well. So if they can keep growing and executing their business, they're going to be all right. And hopefully Brazil stabilizes to some extent. Yeah, congratulations on that. So BNZI is your speculation stock. Bonsai. I remember seeing this one. I love the name. Up 10%. Nice. Beautiful. Year to date. Oh my gosh. Down 37. What the heck? This is a penny stock. Super high risk. Wow, man. Well, it's nice. It's up 10%, but it's had plenty of pain days. Look at that. Whew. Man. James, how you doing? Good to see you. It's been a little while. Any thoughts on Axon? So Axon Enterprises, they're up 3.3%. So these guys are Axon Enterprises provides public safety technology solutions in the United States and internationally. The company operates two segments, software and sensors, and TASER. Okay, so $42 billion market cap, revenue is $2 billion, so you're paying 20 times revenue or so. Yeah, 21 times revenue. And they have a really high PE. They are down for the year, up for the full, down for the year to date. If you measure the last 12 months, they're up 79, 80%. They are growing really well. So very good growth. And in the quarterly, very stable. The quarterly is consistent with the annual growth rate. They have good free cash flow. Gross margins are good. Okay. So I can't get to this valuation. It's a high growth company, but they just don't have a lot of free cash. Now their profit margin was around 60%. Software companies, the really good ones are 80, 90% gross margin. And I think that's showing up in the free cash flow number. It's not very high. And the best I can get to is like 10 billion. It's very overpriced. Analysts think it's fairly priced based on its earnings per share. So if I look at free cash flow, right, for the past 12 months, here it is, and it's growing really well. But let's say if you multiply that times 10, we get to 3.3 billion. All right, I'm willing to multiply it times 30, which would be 9.9 billion, roughly $10 billion. After that, I'm really stretching, and I can't stretch from 10 to 40. Their balance sheet, let's see how much cash they have. So they have a little more cash than debt. They have 255 of cash. Now they're producing free cash flow. So balance sheet's fine. I just don't see this as a discounted stock. Right now, when you're seeing growth stocks, there's a lot to pick from. I mean, toward the end of last year, I think my complaint was it's really hard to find discounted stocks. Now you're like, well, if like Zscaler is discounted, that's cybersecurity. You have CRM is discounted. They're not growing quite as fast, but like Zscaler is growing at this level, I think. So Zscaler is growing almost 30%, similar to their growth. This is a software company. They're going to have better margins, so higher margins. And I think that's a discounted stock. And you can find other tech stocks that are discounted. So this one's not the right one for me. I'm just not going to be able to get to that free cash flow valuation that gets me to 42 billion. I think part of it is this stock's really worked. It's really gone up in stock price over the last 5 years. It's up almost 800%. So I think the stock is really priced to for the company to get larger, become more valuable. It needs to grow into that market cap. But if I'm going to add shares as of today, I feel like there's just too much risk for this stock to come down and I lose a lot of money. Year to date, yeah, it's down a little bit. So it's been settling down. It was at quite a bit higher and down 17% over the 1 month. All right, so that is AXON. We're telling cheese. Roche has worked well for you. Great. Good to hear. Is Roche having a good day today? So Roche, these guys are in England, right? Or are they German? Switzerland. Whew. My 2 guesses were wrong. So this is a Swiss company. Very cool. 274 billion. Wow, big company. Big revenue. 69 billion. PE is 30. It's a slow grower. It's just a big business. They're probably nicely profitable, generating a lot of cash. So here's the free cash flow number, 16.5 billion. And gross margins is 75%. So that's really good. Just what concerns me is slow growth. They're going to be slow growing for a while unless they have a new drug discovered that's a new blockbuster drug, because they're so big. They have to have a big new drug, or they need to acquire a business that's going to help them grow. 16.5, slow growth. I might be able to get to I would take 16.5 times 15. That gets me like 160, 240, assuming they don't have too much debt. So 240 minus debt. They have some debt. They have about 20 billion. So 220 would be my back of the napkin valuation on Roche. So it's a little expensive. It has been doing well for the 1 year, up 25%, but not so well for the 5 year. And then the year to date's doing well. Healthcare is doing well. This one's a winner for year to date. It's been working. I would just be concerned. It doesn't have, I think it has a low ceiling and go up a certain amount, and then it's not going to go much higher because it's a slow grower. In healthcare specifically, you can find really good ideas. Like Catalyst is it's in the same space. It's a high growth small company, higher growth and really low market cap, 2.55. And this stock has been doing really well, but it's had its sell-offs. So it's not like the stock's just flying through the roof. It's done really well for the 5-year, but it's continued to expand, get bigger, get more profitable, and generate more free cash. So this one's been working for me. Rather than buying a big pharma company that doesn't grow, I'm buying smaller pharma companies that are growing. And even Pfizer is growing really well. So I think healthcare offers a lot of opportunity right now. So keep looking in healthcare. We're telling cheese, Nestle. That's another slow grower, right? Nestle. So here's Nestle, 259. I believe they are Swiss. I'm pretty sure these guys are Swiss. Yeah, Switzerland. Man, Switzerland has some big companies. 259 billion in market cap. Revenue is 100 billion. Wow. PE is 21. Okay. So yeah, they're a slow grower. And these guys are, in a way, consumer staple stock. And staples have been working. So yeah, there it is. 23%. For the 1 year, it doesn't look good, but more recently, this thing's really working. Consumer staples are really working. This is not my cup of tea or my cup of hot chocolate, because I always think of hot chocolate with Nestle. It's a slow grower. If you want a nice steady stock, here is a very nice steady stock. But I'm looking for good growth. I want stocks to appreciate and double every 5 years or faster. If I'm going to be stable, I'm going to be in bonds. So there's a couple stable companies that I own. They've done really well, like Kroger. Nestle would not be a stock that I'd be interested in, but I understand why others would be. They have a nice dividend, looks good, steady grower, very well-known name. So, and they're working right now because of they are a consumer staple, and those have been working in 2025. So, all right, I think I'm getting an answer to one of the questions. So, all right, here's a good tip on Argentine stocks. So, YPF. So doing well today, year to date, it's down over the 1 month. So it's had a nice couple days. It's done really well over the 1 year. It's done great over the 5-year. Wow, what do these guys do? Sociedad Anonima is an energy company, oil and gas, upstream and downstream activities in Argentina. Okay, so they're in energy. Okay. So is this a company that was previously kind of like government run and now it's been privatized? Is that the story here? Let's see. Whoa. So this is in, what currency are we dealing with? So I guess this is the currency down in Argentina. But why is this data so, we went from a very high number to a much lower number. I'm not believing that number. It gave me probably US dollars for the most current year, and then the Argentinian currency before, probably. So interesting. So energy is working down in Argentina. Excellent. It had a pullback recently, but overall it's been working, and this stock's been really working. Wow, very interesting. I think I'm going to check it out on my free time. So YPF, and this is the an energy company down in Argentina. Interesting. Thanks for bringing it up. And the other one that you had was PAMP. So PAMP. Is it this one here, Pam? Or is this one here? Okay. So Argentinian currency. Man, these are rocking. Incredible. I hope you're in these, Tomas. These are phenomenal. And the PE is still 18. So Pampa Energia operates as an integrated power company in Argentina. The company operates through electricity generation, oil and gas, petrochemicals, holding, and other business segments. It generates electricity through thermal plants, hydroelectric plants, wind farms. Okay. Interesting. So an energy company, they've been around for a while, 1945. So very curious is what's caused, see, because for a while this thing was doing its thing and then, or this stock was trading at a certain level and then it just took off. What caused it? Because energy production tends to be rather stable. Even like oil, and these guys are in oil and gas, petrochemical. We haven't seen that here in the United States. So I'm curious to see what happened. Was this a state-owned enterprise that was privatized and now it just took off? So let's see. Okay, cool. So I got the right one, bump on it here. But the reasons, yeah, okay. State-owned, interesting. Well, it's working. I know from what I heard, and I'm hearing it secondhand, is that Argentina is getting government out of industries, and that might be causing a lot of this, appreciation in these companies because they become more efficient and they get more profitable if you get the government out of them. So these are great. These are really good ideas. So that's Banpa. What other sectors in Argentina are either working or set to work, Tomas? Where's the next Bampa that's going to go up 10,000% potentially? That's the $100 question. All right, so Omar, FLR, is that a stock that's working for you today? So FLR, FLR. This is a construction company. So engineering, procurement, construction. Up 4.75. Over the 1 year, it's down a little bit. Year to date, it's down a lot. Wow, it did really well for 5 years. Look at that. Going from $10 a share up to, it's now at 36. That's a very good rate of return. Their market cap's quite low, 6.18 billion. Revenue is 16.32 billion. So construction companies don't have, you see how, like, if you look at like Facebook, right? They're trading at, I don't know, 20 times the revenue. These guys are trading at a fraction of their revenue. That is interesting. But the stock's really crushed it. It's done well for 5 years. Over the 1 year, it's been flat. Year to date, it's really going down. So it's expected, I guess my expectation is that we're going to see a contraction in the economy. These guys are in oil. I'm familiar with these guys. I'm familiar with them, that where they play, and they are big into oil. Oil prices are down. There's not a lot of exploration happening in the U.S. That's probably what's keeping Fluor from really advancing. So that's an interesting one. Congrats if you own it. Hopefully you've owned it for a long time. So Shadow Guy. So Sadler's doing well, huh? So I think it's S-Rail. So 4.4, and these guys are in Switzerland. up 12.31%. They did have a big pullback, but have been steadily climbing, and they're having a good year. So these guys are, they manufacture and sell trains. Now I'm hearing, and again, I'm way in the United States, and I'm hearing that in Europe they're going to start investing in infrastructure, specifically Germany, that they're going to be doing more infrastructure. So that might help these guys most definitely. So that stock's beginning to work. Tomas, GMAB, yeah, we looked at it yesterday, and I agree that it looks discounted. If you're in Europe and you have a very good understanding, I think they were in, is it Denmark? That could be a really nice stock for somebody. Let's see, GMAB, right? Yep. And they're in, yeah, Denmark. I just have good options here in the US that I can invest in. So rather than going all the way to Europe to buy a company that is a biotech company, I could buy a biotech company here. I'm in California. We have a lot of biotech companies. But if you're in Europe, this is a great idea. You could probably have a better information to act on and look at GMAB. It does look like a good company. They're growing really well. They're profitable. It's just if you're in Europe, you got the advantage. Good luck with it. We looked at it yesterday. We're telling cheese. So VERX. So Vertex. So these guys are a software company. They provide data. So around tax, they get integrated into software programs, and then when a business sells and they have to charge sales tax, they use Vertex for that data. Pretty good growth. It's a little bit like DocuSign, and actually growing faster than DocuSign from a percentage. They are smaller than DocuSign. That's good growth, 16.49. What's the stock been doing? Over the 1 year, it was doing really well, and then it really came down. Look at that. It was nearing $60 a share, and now it's like $33. Wow. What happened? Did they have a really bad earnings? That's probably what happened, is they guided that they were going to begin to slow down, and the stock really sold off. So overall, if they can keep growing at 16%, gross margins are good, free cash flow is okay. I would say they're worth like $2 billion, and they're way up there at 5.29. Their cash flow isn't very high. It's a little surprising that their cash flow isn't higher. Their balance sheet, they have a little bit of debt, 46 million. Yeah, this one doesn't float my boat. It's a little too expensive. I can get to like 2 billion, maybe 3, and they have a $5.29 billion market cap. Just their margins are not like a pure play software company that are like 80, 90%. And then their free cash flow isn't very high. So their gross margins are 63, which is very good, but then their free cash flow isn't very high. So 1 second, guys. Sorry about that. I was expecting one important call and that was it. So these guys, just their free cash flow, they've been around for a while, by the way. I've known of these guys for a while, and it's good that they're growing. They just haven't been accumulating a lot of cash, and their valuation is not there. The other thing too is like Vertex, the value they bring is they're integrated to other bigger software programs, and they bring that data. Is that data becoming more readily available? And if it is, these guys lose value because their moat is under threat. So this one here, it's just not something I'd be interested in. There's good choices in software right now, really good choices. You can go big software with like CRM. DocuSign's having a really good day. I think Zoom is a really discounted stock. There's really good choices in software, and I think choices that are better than Vertex. So Shadow Guy, so YPF, yep, went through that. So Bear, like, can't wait for another haircut next week. That might be the case. Yeah. So Mike, yeah, it's nice to enjoy today because next week might be another week of really tough days. We'll see. I'm not wishing it, but it most definitely could be the case where we have some bad days. So Nicholas, you're thinking about PayPal. I think PayPal is discounted. It just doesn't catch long-term rallies. Today it's having a decent day, but it's a really positive day for everybody. See how the 1 year had this really nice run. It went from 59 up to 90. That was a nice run. It would have been nice if they could just sustain it. See, they were really valuable coming out of COVID. They could just sustain a nice long-term appreciation. It'd be good for everybody, especially stockholders. They have really good fundamentals. 13.62 is a really nice low PE. They continue to grow. They make a lot of money. They're integrated in a lot of places. They generate free cash flow. I mean, I own a lot of PayPal, and I think they're going to do well over time. Their value is going to show up. I think they're probably discounted by like 100%. Let me take a peek. Just their free cash flow is so darn high that it creates a really nice valuation. Yeah, I think they're discounted by like 113% just because that cash is so high and they keep growing it. So at long haul, you know, stock market short term is a voting machine. Which stock's popular? Long haul, it's a weighing machine. Let's weigh those free cash flows. And PayPal looks awesome. It's been doing okay. I'm making money on it, but it hasn't had just a long term, appreciation. It's had, and it's hard to see this graph because you have this big number, but you've had this run. It did really well coming out of the summer into the winter, but then it faded along with a lot of other stocks. So, but overall for the year, it's up 8.84. If you bought at the right times, you're doing far better. I'm doing far better than that. And year to date, it's down 20%, but a lot of stocks are down quite a bit. Even Visa and MasterCard have had some tough days. So yeah, I'm a buyer of PayPal. All right, so I think I'm caught up with that. Neil, how you doing? SoFi again. Is SoFi doing well? It's up nicely. Year to date, not so nicely. And 71%. Looks good. I'm always a buyer of Robinhood instead of SoFi, and that's been my choice for a while. Robinhood's up nicely today. It's up for the year, and it's really doing well. So Robinhood's my choice over SoFi. They're different companies, but kind of in a similar, same sector, but they do things that are different. SoFi, I'm not completely sold on their profitability. and that's why I'm hesitant to ever buy that stock. Yeah, Rotel and Cheese, DocuSign is having a good day. That's definitely the case. It's up 18.55. Good deal. Very good day. So, shadow guys, take a look at LMT. Lockheed Martin. So for the year to date, it's down 3.86. For the 1 year, it's doing okay for the 1 year. It does pay a dividend of almost 3%. Now it had an earnings and it really sold off. I think it was here. They had an earnings and it was concerning that they could show up with such poor earnings. They got to communicate better with investors. They really surprised investors, and when you do that, your stock is going to get lit up. They're going to announce on April 22nd, meaning they announced previously around the third week of January. So that happened around here, and the stock sold off quite dramatically. And I remember the earnings were surprising to the downside. Like a lot of things were, it seemed like the business was being mismanaged. And I ended up selling my shares. I'm like, I'm out. I don't want to be part of that. And they don't have a lot of profit. So let's take a look. 17 PE. Really, I'm going to say a high market cap, 109 billion, although tech companies are humongous now. They continue to grow, but let's take a look at the quarterly. See, this is where this was a surprise. They contracted a bit. Okay. And free cash flow, 5.2 billion, slow grower, contracting a bit. And then the gross margins are really low because it's a defense contractor. They have to do cost plus contracts. The government doesn't want them making 80% margins on making airplanes. And so this one here just was a little too pricey for me. And the margins are really low. I just don't think it's going to have tremendous upside. The military kind of trade started to happen when Trump was had a good chance of winning here, and then obviously he won, and it really worked, right, for a little while. Then it pulled back down, and hasn't stopped from the pullback. So this one's here. I'm not going to invest in Lockheed. I don't think I'll be investing in it anytime soon. This one, in my opinion, is priced a little too expensive based on its free cash flow, and it doesn't have a tremendous amount of upside. See, it's kind of gone sideways. It had a really good moment due to the election, but it's up 42%, pays a dividend. This is acceptable to some investors, but if I'm going to be in a stock, I'd rather see 100% over the 5-year or higher. That's the goal. So Lockheed is not a stock buy for me for the reason it just stated. But good luck with it if you're in it. Neil, sorry, Mike Dividend Investor Guy. Okay, cool. So Zion, so Brookfield, I think Brookfield is that private equity. We looked at it a few days ago, I think, yeah. And private equity's kind of been selling off, and all the private equity is being sold off. I think the general reason that these stocks are not working is these guys get our money as stockholders, and then they invest it in companies, either through acquiring businesses, taking them private, doing these joint ventures and so forth. And when they do that, they can't get out of those investments for a while. And if you have a down market, it gets even worse, because let's say they bought a company and they're like, hey, let's take it private, and then later on we'll go through an IPO again, and then we'll come out of it making a lot of money. Well, you bought the company, you can't sell it that easily. You don't want to IPO in a down market. So Brookfield and all these others, Blackstone and their Ares, they're all down for that reason. And if we have a recession, we have a down market, it's going to get uglier for these kind of investments. So I'm not touching them. They're all going down kind of together. And they're going to go down until we have a growing economy and things improve far more. They don't improve far more. These guys are just going to be hurting for a while. All right. Neil. So we went over Robinhood, Genetics. Mike, how you doing, man? Finally a positive day. I agree. Finally, just a day off from seeing red. And we can't admit victory just quite yet, right? We still got about 3.5 hours, so hopefully nothing bad happens at that time. But we have a lot of green, man. We got Nvidia up really nice. JP Morgan is up really nice. Meta's up. Energy's working. Very good day. Apple's up. Apple's been struggling. Uber's up. Adobe's up nicely. Although Adobe had a horrible day yesterday. So looks good. A lot of green. A lot of green. I heard you mention dollar cost average a lot. Cool. Good. Yeah. So dollar cost average. Yeah. I'm glad that it made sense, right? So let's say, what's the stock that I'm buying into? So I talked about CVS earlier. So I'm going to talk about CVS. So CVS for the last year, it's been a stock that's all over the place. I believe it's going to do really well. It's doing really well for the year to date. It got its business right. Okay, this is a really valuable business. It's traded much higher in the past, right? And look at these valuations. So, in the 5-year, 3 years ago, it was trading at over $100 a share. So it got its business right. Now, I dollar cost average because I believe in the company and I started buying it, especially around these prices. But I didn't know if that was the low. And I still think it's discounted. So I keep buying shares and it's working. So that's why I buy dollar cost average is I find businesses. Let's look at CBS. We'll look at PayPal as an example. So PayPal, I believe, is trading well below, the stock price is well below the intrinsic value of the cash flows the company is going to produce in the future. And that's the purest way to value a company is you look at the free cash flows in the future and you say that company is going to produce a big giant pile of cash. Now let's do net present value. If you don't know what net present value is, Google it, learn it. Attend weekend sessions on this channel. We could teach you, or I could teach you. But it's just a concept you have to understand if you're going to be an investor. And you take all that cash, discount it, and you get to an intrinsic value. When you trade and you invest in a company that is giving you a very good likelihood of earning all that cash going forward at a significant discount, you're going to do well. So why do I dollar cost average is so long as I see that I'm buying at a discount over time, I'm good. But it's very hard to know at what point is PayPal going to reach a really low point? At what point is it going to get go up, down, and so forth? So it's easier for me, and I think it's a better strategy for me just to know I'm buying into a discounted company and I'm going to buy over time and I'm going to accumulate shares. The one example I'll put out there, Netflix. So the chart on Netflix is all over the place. Okay, so this was in 2022. Yeah, this is perfect. So 2022 Netflix, you see these steps here? Okay. So Netflix, obviously we know what they do. The whole world subscribes to their service. It came down here. Bill Ackman, the super investor, came in with a lot of attention and fanfare buying into Netflix. He put like $4 billion into the company. And the company kept selling off. And he's a big bet investor. He doesn't believe in DCA. So the company kept selling off. And at this point, he said, I'm out. He cashed in his loss. And then the stock took off. And from that point, it's up 400%. I started buying around this zone down here. And I didn't know if that was the bottom, but I was willing to buy and I kept buying. And I ended up selling like up here. I made a really good return on Netflix. I also bought it for my son's portfolio and he still owns it. And I bought like down here. He is crushing his original investment. So DCAing Netflix around this zone was a really good move. Even the great Bill Ackman couldn't figure out at what point is the bottom. He thought it was here. He was wrong. He went down like 50%, tapped out, sold his entire position. It's a documented trade. And then boom, the stock took off. I'm sure this one's eating at him. I have to think. He's like, oh man. And I have a couple of those. I'm going to show you United. United, I didn't stay in it long enough. These turkeys, man. See, I thought this was going to happen. But I started investing like back here thinking travel's going to rebound. It's going to rebound. These guys make a lot of money. They make a lot of cash flow and so forth. And I was in the stock and I finally started to work, and probably around here, I'm like, okay, I'm getting out. I'm just tired of looking at United. It's not going to work. And I cashed in my shares. I had a small gain, a modest gain. And then the stock took off. Let me tell you, it ate at me. I'm like, oh man, I was in the stock for like 2 years. I just finally gave in. I just didn't want to see the stock. I remember a lot of people saying airlines are a bad idea. And then the stock took off. Now, the only thing that makes me feel better is I would have probably stayed in the stock, and the stock's really collapsed recently because nobody's going to travel going forward. So we all have stories like that. DCAing is just the right approach for me. And I just want to be generally right than perfectly wrong or perfectly right. Being perfect is really hard. I'd rather just know that I'm buying a company, buying it at a discount, I'm buying in the right period of time, and over the long haul, I'm going to make a lot of money on PayPal. That's my feeling on it. So long as they keep doing what they're supposed to be doing, the management team keeps executing the business, I'm going to be all right, because this business inherently is very valuable. Look at all this cash they produce. PayPal doesn't have to get expensive real estate, operate retail, hire a bunch of employees. No, they have a technology-based solution. When I use Venmo, they're not hiring people because 10 million people started to use Venmo today. The platform just gets extended to 10 million more people, and PayPal makes more money. Or when their PayPal checkout process on a website, ditto. They don't have to hire people to grow. It's a very lucrative, profitable business that I want to be a part of. Good conversation. Those are good questions, guys. All right. Rotellant cheese. Thanks, man. Joey, good to see you again. What's my cost basis on PayPal? So PayPal is financial services. So I'm up 3% on PayPal, and I don't have a cost basis per share, but I've invested 56 $58,000 and my shares are worth 58,000. All right, Mike, the dividend investor guy. Sometimes I feel like someone is watching me, and as soon as I sell something, it will shoot up. Perfect. Yeah, man. Yeah, I know there's a couple that have just really stung. I think I told you about United. And then what's another one that's really stung? I can't think of another one. But I've had some good winners too. I mean, I think Meta was a good move. Zim was a good move. Like I bought it and sold it at the right times, made good money. I shorted Nvidia and made money, and I made very little money, but it was more like just to put a little money in the game because I thought Nvidia was overpriced in June of 2024, and then I followed that stock and made a little bit of money. So, but I'm not going to short stocks for a while, man. It's just too distracting. Even though I had very little money on the line, it was just always out there, and I'd be thinking about it too much. I started talking about Nvidia being overpriced like around here and recording videos, and so far it's done nothing since then. So it's kind of like I was at least partially right, and that's after Nvidia had been screaming up. It had gotten to about this point. So now Nvidia is proving to be a cyclical company along with the rest of the space. So it'll be interesting to see what happens. I think Nvidia is a terrific business, but they're going to see a big contraction in revenues. I'm pretty sure of it. Yeah, man. Okay, you reminded me of one. So I owned Tesla, and this was one of the few stocks that I bought. Like, there was no fundamentals behind it, but we're talking like back here. I bought at $100 a share. Did they split? Because I bought it way back here. It's probably a stock split somewhere. It was like 2012. I bought Tesla. I made some money and then I sold it. So yeah, I've got one of those too. But overall, so long as my portfolio keeps growing substantially each year, I'm good. I don't have to be perfect. In fact, I just talked about Bill Ackman, right? He didn't get Netflix right. And Rotella Cheese, Ackman is selling out of UMG. What is UMG? Universal. Yeah, I think that one's a loser, right? Yeah. I mean, Spotify is just Spotify and YouTube are crushing the music industry, just crushing them. So this is kind of an old school company. Don't know what they're going to do, but I was going to go to Warren Buffett. So I don't think anybody ever disrespects Warren Buffett. He's awesome. He's great, but he's not perfect. And the intent of this piece here, this little segment, is not to say anything negative about the great Warren Buffett, but it's just to show that you can be incredibly successful and wealthy doing this while making a few investments like Occidental. And then Ulta, he bought and he got out of because he lost money. Ali is losing money. Let's look at Oxy. So Oxy 3 years ago, he looked like a genius, right? He is a genius. He didn't look like a genius. He is a genius, right? So Warren Buffett buys Oxy, and everybody's like, Warren Buffett, he's the man. Cool. But he kept buying it, and he's bought shares recently. Okay, Oxy's not doing anything. And I don't see anything great happening. Yeah, Ulta went up big time, but Warren Buffett got in and got out and lost money. He also lost money on Paramount. And so Warren Buffett's not perfect, right? He lost big on Paramount. And look at he started buying in, he lost a lot of money on Paramount. And he took the high road. He absorbed all the blame for it and just said it was my fault. And he has the credibility to kind of weather that kind of event. So you don't have to be perfect to make a lot of money. I don't have to be perfect to make a lot of money. I could just keep tracking and make very good gains, setting myself up to have more money than I'll ever need in my lifetime, setting my kids up, setting everything up, man. And pursue it till, like Charlie Munger and Warren Buffett, man. Pursue it till I'm dead and make lots of money and leave it to my kids. So, all right. Yeah, Ulta Beauty, man. Yeah, this thing's, man, look at this painful chart. It kind of teases you here. It's going to go up. Oh, no, it goes down. And it's going to go up. No, it's going to come down. Oh, man, rough. All I could say is, these guys have to have expensive real estate, hire a lot of people. They're in a business where, it's cosmetics. So ladies appreciate, paying a high price for the cosmetics that are just the right ones for them. There's a lot of competition, man. There's competition at the department store. Ulta has to compete against these really established companies like Maybelline and God knows what. I'm not in this space because I just can't understand it. And this is a pure consumer discretionary product. And these guys have been hammered. They were doing really well when they were growing. Part of it was they were kind of a new model where they do a lot of consulting in the store. They also benefited. Remember those stimulus checks? People were getting all that free money. If you're a high earner, I remember I didn't get checks when other people were getting them. And people were getting that money, and I'm going to go to Ulta Beauty and spend some money on myself. Cool. And then once they had to depend on, no, you got to keep growing, that's where a lot of the trouble started. Is, okay, you don't have stimulus checks. You have to compete against your competitors. You don't have a moat. I don't know where these guys are going to go, but that's not my investment. Remember, it's not a crime to wear makeup. Yeah, that's good. It's not a crime to wear makeup, but it should be a crime if you don't wear makeup. Very good. Yeah, so Elf versus Ulta. So Elf Beauty, how are these guys doing? Man, similar chart. Owie. I think the economy has to turn for these guys to start growing again. We'll see what happens. All right, is this market going to behave itself for the rest of the day? I hope so. I want to ride into the sunset for the weekend on a high note. So the NASDAQ correction territory. We'll see if this is a dead cat bounce or, I mean, it's a pretty substantial day, right? That is a really nice day. The other thing too that I noticed earlier is there was a sentiment report, and it came in rather negative, and the market still rallied. The Michigan sentiment report, the actual was 57.9. That means that the level of enthusiasm is lower. Like there's pessimism in the market. So it was supposed to come in at 63. It came in at 58. Call it 58. And then expectations report came in at 54. It's supposed to come in at 64. And even though this was negative, the market rallied. It's not a big important report. I just remember hearing it and I'm like, oh, it's interesting. The market's doing the opposite of what that report would lead me to believe was going to happen. Like if it influenced the market it would have taken the market down. I think the market made up its mind that, hey, it's going to rally because some people wanted to buy into certain stocks. You've been adding on ELF on the dips, huh? Okay, so these dips here, wow, at one point, this thing was just crushing it, right? Wow, look at that, 900% gains. But from that high point to now, it's 69% drop. Wow. Interesting. And what's their market cap? It's still a small market cap. Okay. Interesting. Paul, how you doing, man? Good to see you. So GOOS. What is G? Canada Goose. You know, this is in I know a super investor owns this. Is it Michael Burry? Remember seeing this and it caught my attention because I'm like, huh, that's an interesting company. Michael Burry. And let's take a look at it. So Canada Goose Holdings, together with its subs, designs, manufactures, and sells performance luxury apparel for men, women, youth, children, babies in Canada, the US, Greater China, the rest of the Pacific. Cool. Where are they located? They are located in Canada, in Ontario, in Toronto, excuse me. It is in Ontario. It's Toronto is the city. Okay. So 847 million. This is a consumer discretionary company, right? Yep. Okay. 12 PE financials. Growth, growing a little bit, 4% growth. And they're contracting if you look at the last 2 quarters. And they contracted in the Christmas, in the holiday quarter. That one would be concerning to me. Okay. So they're contracting the last 2 quarters. Growth is slowing. The economy is slowing. Not looking good. I would not be running out to buy consumer discretionary companies. Consumer discretionary is way down here in the year to date. It's having a tough time because we're expecting that the economy is going to slow down and businesses are going to struggle that do consumer discretionary. These guys are showing that they're showing signs of slowing down. Okay. So they're not growing. Do they make money and lots of cash? Let's take a look. They do have cash flow, 214 million. And is that number contracting or expanding? If we look at the quarterly, they're kind of all over the place. So I'm not able to get a trend there, but it is expanding if we look at a full 12 trailing months. So we got cash flow at 214, gross margins of 68, which is very good. That's like better than Nike, better than other consumer discretionary product companies. Okay. So no growth. This business is worth like 2 billion, maybe 3 in my mind. And they're at 847. Wow. This is a value play. Now we got to make sure it's not value trap. So 214, their yield on cash is very high. Okay. So I read something that I want to repeat to you guys is, so Pat Dorsey's probably the super investor that I believe in the most, or I would say I learned the most from as I read his stuff. Like Michael Burry doesn't do a whole lot, and Bill Ackman's a little bit too much of a showboat for me. Warren Buffett doesn't do a whole lot of new stuff, but Pat Dorsey expressed this, which is When you look at quantitative information, those are numbers, revenues, that information is fairly priced, or I should say companies are fairly priced based on that type of review. Where it's not efficiently priced is in the qualitative. What is qualitative is in consumer discretionary, will Canada Goose grow in the calendar year 2025? Will they grow in 2026? Do you think their product is superior to their competitors? That's all qualitative. Numbers are not going to tell you that. So you'll have to look at Canada Goose and establish your opinion of that. I can't tell you. I live in Southern California. We wear jackets as a fashion statement. We don't wear them because it's cold. But I'm sure Canada Goose puts out product that people in cold weather areas really need and they depend on. And if their product's better, their product's better. I can't tell you that. Somebody that lives in that area or maybe is familiar with their products might be able to say that. So that's where the difference is going to be. Is if you believe in their products and in the business, this might be a good opportunity. This is not looking all that great. The other thing that Pat Dorsey would say is moats. He likes investing in a company that has two things, keeps it simple. That's another thing I love about Pat Dorsey is even though the guy's a freaking genius and he's been really successful, it's very simple the way he invests. He's looking for companies that have strong moats, competitive advantages in the marketplace that nobody else can meet, exceed, beat, right? Perfect. And they're very efficient at deploying capital. They don't screw up and buy things that they shouldn't be buying, invest in things they shouldn't be investing. Those are the two levers. So first, moat. Does Canada Goose corner the market on jackets and luxury apparel and so forth? No. Are they good? I'm sure they are. I mean, I have to imagine their products are good. Here's their stuff. Okay, they have jackets. Cool. Looks like good stuff, but it's apparel. To me, it kind of looks the same, right? If I went to, what's another brand that I like? I like Columbia, right? Columbia's been around for a while and they have nice gear. There's also like North Face. There's all these different brands. Well, you're competing, against all those brands. So it's not a very strong moat. It might be a preference that people really believe like, hey, their jackets are better. And, they know because in Canada it gets cold. These guys know what they're talking about when they make jackets, okay? But the moat's not super strong because you have competition from Columbia, Sportswear, you have North Face, you have many different brands that are competing against them. So the moat's not very strong. And second thing is deployment of capital. And these guys, let's see how much cash they have. So right now they have debt. What's their debt to EBITDA? Debt to EBITDA is right there at the limit. So yeah, I'm not excited about the business. I think it provides a very strong value proposition. It's really discounted, but it might be discounted for a reason, right? That, hey, they're an apparel company and you're always competing against new ideas. Like somebody comes out with new apparel and it's pretty exciting. And next thing you know, they sign a deal with, really, really powerful influencer or athlete or celebrity. And now they take business away from Canada Goose because they're paying Ryan Reynolds to be the spokesman for this new brand and so forth. That's constantly the battle in this type of market. So for me, it's a pass. It'd probably be a little too much of a value trap risk. And this is this one stock that when I was looking at Michael Burry's portfolio, which I think he's really good. I really like his portfolio. China, cosmetics, healthcare, China, healthcare, I don't know what VF Corp does. I forgot. But then I got the Canada Goose, and I'm like, what? What's he doing in an apparel company? What's he doing? And I scratched my head and just thought, okay, I don't have to make sense of that because I agree with him on all the other stuff. Healthcare in China. Okay, hey, I agree. That's similar to what I'm doing. I'm like, Michael Burry, you're awesome. The Big Short, and couldn't get my head around this one. But he's a lot smarter than I am, and he just bought. So he's seeing something. Maybe he saw those numbers and he's like, oh, this is too much of a discount. Although he's losing money. So he's already lost 14%. So maybe he's gonna, I don't know. I don't know. Watch it. That would be a good thing to watch is if this guy's invested in it, will he increase his stake in Canada Goose? All right. There you go, Paul. Good luck with that. Danielle. What do I think about him? I just talked about NVIDIA. You might want to watch the recording. In general, I think NVIDIA is probably going to go sideways, maybe lose some value. And I think their fundamentals are going to drop. I expect they're going to see a contraction to their revenue and probably they're going to start forecasting it late in 2025 and then we'll see what happens. Bear Light. We'll see. We'll see. I hope whatever the president's doing, I hope whatever he's doing works for the country. If there's some short-term pain and there's long-term gain, I'm an American. I want the country to be strong. I've got two young sons. I want the U.S. to be strong for the next 50 years. So whatever president's in office, I want them to be successful for the better good of the country. So we'll see what happens. So Paul, he started buying last quarter. Again, caught my attention. I'm like, this is the Big Short dude. What's he doing buying an apparel company? Maybe, I don't know. He went to UCLA. So I don't know where he lives. Where does Michael Burry live? Does he live like in a cold? So he lives in Saratoga, California, which is in Northern California. He grew up in San Jose. Well, what's the dude like? He has a background in medicine, neurology, pathology, resident at Stanford Hospital before his hedge fund. Dude, come on, man. Don't set the bar so high. Like, that's pretty high, right? That's pretty impressive. Incredible. Incredible. All right. Good one. Yeah. You just brought up something and see, I think I had heard that he was a doctor, I think in a documentary I saw of him, but I forgot it. Now I'm even more bought into his belief in healthcare. Like I've been investing in healthcare. It wasn't because Michael Burry said, "Hey, you had to invest in healthcare," but he is an influence on me. Now I'm believing more of what he's doing. You bring up a good point, Mitch. Good to see you, Mike. Good luck. MCO and Equifax. MCO. Moody's. So Moody's has been doing well. All these companies have been doing well. But if we see fewer trades, these guys are going to lose revenue. And you saw that real bad contraction. So if we go into a bear market, these guys are going to feel it. They're already feeling it. I mean, that's a pretty good pullback. Yeah, 17% down. Still a winner for the year. These guys have been doing really well. All these like financial information companies, they've been doing really well. every time I value them, I'm like, I'm not convinced. They have good growth. They had a contraction here in 22. See, here's my point. See how 22 is a bear market, their revenues went down. If we have a bear market in 25, their revenues are going to go down. So that's why the market is pricing in potentially this bear market's going to affect them. So you have to keep that in mind. But when I look at them, right, it's good growth, expecting some pullback because of the bear market that we're in. And free cash flow is 2.5 billion. And with that growth, maybe I hit it with like 20 times free cash flow. I get to 50 billion and they're at 80. Like, I'm not getting a discount on this stock. No, thank you. They have a strong moat. There's only one Moody's, and these guys kind of have a captive market, but they just don't produce enough cash. And it's across the board on the other ones. I think there's symbol ICE, ICE, ICE. I have the same kind of conclusion on those. Equifax is a data company. I think they do like data analytics technology. So Workforce Solutions. So do they do, oh yeah, okay. So they do like criminal backgrounds and data if you're hiring somebody. Well, there's going to be job losses and less employment and less hiring. These guys are probably going to suffer. Look at that. I don't know if it's going to get easier for them anytime soon either. So I'd be pessimistic on their economy. They're a $29 billion market cap company, 5.6 billion in revenue, 31. Slow grower, but I could expect a contraction from them. If you see hiring or job losses like we did here, you'll see their business contract because they get paid as people get hired. Free cash flow, 200 million. It did come down in that quarter. That's the quarterly. Let's go to the annual. Margins are okay, 56, not great. And then 800 million. So this is a slow grower, single digit, and I would expect that they're going to contract a little bit. So yeah, so this one would be tough. Maybe $8 to $10 billion market cap, and they're at 29. I just don't see how I'd ever invest in this company. The other thing too about this business is this could be like an AI experience business case. You know, you have a potential new hire interact with an app that is AI driven. You answer all these questions, they collect all this information. The AI itself goes and verifies everything, comes back and says, hey, this guy's good, you can hire him. You can bring him on board. That can totally be a disruptor to these guys and take away their business. So this one's a solid pass for me. Yeah, you know, when you look at some stocks, you know, they've been kind of a staple in a lot of super investors, but you got to make your own decisions, right? You follow the herd. That may work, it may not. More importantly is you didn't teach yourself how to find just a diamond in the rough, and then you're sitting on a 5-bagger, a 10-bagger. If you learn to do that, then you're gonna have a lot of success. So, all right. So let's wrap up this show. So stock market's still in the green. Looks good. NASDAQ still up nicely. Looks good. All right. Well, that is it, everybody. Thanks for tuning in. Appreciate it. Let me just pitch becoming a paid member. I'd really appreciate it. We're going into the weekend. We'll have a weekend session on Sunday. And if you want to learn a lot of this stuff, you know, I share some of the tools that I use with paid investors. So if you become a paid investor, you'll have access to those tools. And I'd really appreciate it. I'd appreciate your support on that. And you can find more details on the stream details as well as my channel. All right, everybody, have a nice weekend. Take care.